Good morning, everyone. Welcome to today's live stream. Today, what we're doing is we're trading an EA, which is basically a trading robot, and it started off with $1,000. Did have a little bit of a slow period. Um, so right now, what we're waiting for is for that EA to detect an entry, so that we can be entered into a trade either long or short. Now, this EA is designed in such a way where it's okay. Here we go. We have just entered into a sell trade. So this EA is designed to be liquid with price. So if the price chooses to move down, it's going to be selling. If the price chooses to move up, it's going to close that sell and enter into a buy. So it was designed to be liquid with price. So in periods where the price becomes very choppy, you could find yourself going into a short drawdown period. But in times when the price moves aggressively in one direction, you are able to make substantial profits. In most cases, making up for those losses and making substantial profits. So, as you saw, the EA was, it closed out the sell trade and it now has entered a buy trade. And that is because the price was going down when it entered the sell, but then the price pulled back and wanted to go to the upside. So it entered a long trade. It does not mean that the price will continue to the upside, because if the price decides that it's not going to continue going up and it's going to drop again, it's going to close out that buy. As you saw, it closed out that buy and it entered into a sell, right? So now it's looking for the price to go down. So what we really want is just for the price to move aggressively in one direction. Once the price moves aggressively in one direction or consistently in one direction, it's going to be all good. So right now the price looks like it wants to come back to the downside and we're in a sell trade. So we lost, let me see. Let me just show today's history only. What did I click? Today. All right, so just for today, we lost $7.23 so far trying to catch a direction, right? And we're at $2.33 right now in profit. So let's see if we're able to make up for the loss and end this 30-minute segment in profit. So all we want to do is end the 30-minute segment in profit. Now, there is reasons why I chose to allow the EA to only trade from 8:30 to 9 and from 9:30 to 10. The reason for that is because that is the most volatile period in the market. I mean, just look at over here. This is nothing, right? This is very slow, very choppy. So this is not necessarily the best conditions to be trading in. All right, because when the price chooses to explode out of these types of ranges, it's going to pose a problem, right? If you're on the wrong direction, that is. Well, with some of those other EAs. With me, with my EA, it doesn't matter what direction the price wants to go in. Once it moves consistently in the same direction until certain exit conditions are met, you're going to be able to lock in that profit. So all you're looking for is to move consistently in one direction for a long enough period of time, so that, or a great enough distance, so that that profit can be locked in. We also have the time element. So as soon as, let's say in this case, 9 o'clock is met, then the EA will stop trading, and whatever profits it's in, it will bank that. If it's in a negative, it will just close with that negative, right? So we're just looking for volatility to come into the market. The price was going down. It has turned, went back to the upside, and as you can see, we're no longer in a sell trade. We're now in a buy trade. So all we're looking for is for the price to continue moving in one direction. And so far with this type of flip-flop that we have going around, we've lost $10.41. Okay? Is that $10.41 going to be worth it for the next move that's going to come, whether it's going to be up or whether it's going to be down? Right now it's looking like price wants to continue to the upside. So if this $10.41 loss, if price continues moving to the upside, we're going to be able to make that back very quickly. So we just need some volatility and momentum in the up direction right now, since we're in a buy trade. If the price chooses to go down, it's not a problem. We will take on the small loss. If the price chooses to move down aggressively, it would be great. So it does not matter what direction the price chooses to go in. We just need the price to move there with speed and be consistently in that direction. That's all. All right, so we're going to watch for now. See how this plays out. Price is still heading to the upside. All right, so price is still heading up, which is lovely. It's moving slow. Usually we'd have a lot of volatility between 8:30 and 9 o'clock. Between 8:30 and 9 o'clock, because that is where the Forex market news starts to come out. So volatility normally comes into the market around that time. Not all the time there's going to be a lot, but in most cases you will see some sort of, trending direction. Either price is going to be moving down consistently or moving up consistently around that time. Sometimes it moves very fast, especially on CPI days, extremely fast. And so we're able to bank most profits within that time period on CPI days because it moves extremely fast. But generally between 9:30 and 10, we will get volatility. In some cases, there is low volatility around that time, but in most cases, there is a lot of volatility coming into the market around that time. So price seems to be struggling for upside. Let's give it some time, see how it plays out. Just going to make these bars a little longer. So once we see price moving this slow, we already know that it's low volatility. Slow movement. All right, so we're in that long trade and we're just watching, just allowing this to play out. Let's see if it continues moving aggressively to the upside. That would be nice. We're already in the long trade. So it would be nice if it continued moving up. But it really does not matter. Once it moves consistently in one direction, we're going to be happy either way. All right, so price looks like it's starting to go sideways. So if it continues to go sideways for a while, and then we break the high, we could see a little bit more volatility push to the upside. Let's see how it plays out. We still have about 20 minutes left. A lot can happen in 20 minutes. This section of the day, which is considered to be pre-market and market open, this section of the day is pretty much the most difficult part of the day to trade manually, because the price can move so fast, so aggressive within that time, that it's very difficult to be able to track it or enter into trades. And it's very difficult for a lot of traders. It's also a very unpredictable and sporadic period of time, right? Especially at the market open, 9:30, it becomes extremely sporadic and aggressive around that time. So a lot of traders trading manually are unable to keep up with that. So when you have a tool that can trade that period successfully, then you have a powerful tool. And this tool could trade that period successfully. Not saying that there's not going to be situations where, it takes on some losses. If the price does not move, then there is only so much that we can do about it. So it will do its best to try to catch whatever it can in that period of time. But what we're looking for is to catch a nice move in one particular direction. So if it moves aggressively up, great. Aggressively down, great. So right now we're moving up. Not that much, but at least it's moving up. We'll see if it continues in this direction. If you can see this, we have basically, let me just, I'm going to array this. Right, so that is the uptrend. And this is the minor uptrend, right? And we could still, cut this down by putting another trend here, right? But if price respects this one, it's going to continue traveling to the upside until it breaks it. When price breaks it, then you have exposure of this distance, right? Right now you have exposure of this distance. And if it breaks down, then most likely you get a reversal. So price is pulling back right now. We did see this aggressive pullback here, so this could be what's happening here again. Another pullback, and then it continues moving up. We'll see. Does it really matter what price wants to do? Not that much. Once we have enough time to catch a decent distance. All right, so right now we're pushing back to the upside. This could just be a bluff where they're looking to suck buyers into the market and then flush them to the downside again. Or this could just be the flat pattern that I mentioned earlier, where price is supposed to go back to the upside. However, if it chooses to go down and I get stopped out, it wouldn't really matter. I'm just looking to follow the price in whatever direction it chooses to go. So if it chooses to go up, great. If it chooses to go down, great. So it's doing exactly what I thought it was going to do. Bluff buyers to get in and then pull down again. Stop out those buyers and continue moving to the downside. This is another thing that could be called a liquidity grab, right? So they create this high, start to move down, pull back, take out that high, stop out whoever tried to sell, and then drop. So price action can become very complicated, and that's why over the years I've worked so hard to try to simplify it. I've spent more time trying to simplify price action than trying to just basically trade one strategy. I've been trying to create, like, I don't want to say super strategies, but I've been trying to create strategies that are so simple that you don't really have to do much thinking when it comes to, getting into a trade. Specific levels is a good thing as well. When you're manually trading, you want to have specific levels, very, very strong levels. And that is another thing that I've worked on, to find very strong and specific levels that are set in stone. So whenever the price gets to those specific levels, then I would look for my entries. And it's not your basic support and resistance either, because that is a method that is well known by almost every single retail trader. So using simple strategies like that would simply just put you in a position where the market makers are going to basically get you, liquidate your positions, right? But when you trade strategies that almost no one really knows or understands, and you're doing it in line with how the market makers move price, then you're going to find yourself on the side with the market maker. And that's my aim, to find myself on the side with the market maker. So here you have price pushing back to the upside again. This could still yet be another bluff, trying to bluff the buyers to come in. And when the buyers come in, they drop the price. This also could be a bluff to the sellers to get them to jump out of the sell trade. That is just the manipulation in the market. So when you can remove yourself from all of that emotional manipulation that happens, then you're going to find some success as a trader. The ability to remove yourself from the manipulation that is placed in these candles when they move up and when they move down. Psychologically manipulate you. So this strategy that we're using right now is designed to be profitable 100% to 200% return on the account within a 3 to 4 month period. Because price is going to move in a certain way more than other situations. So in some situations, you're going to have price doing things like what it's doing right now. You saw that. It just kept trying to suck the buyers in, but then the price continues to drop. So my EA was able to detect that, hey, we're at a point where the price could continue going down. So that buy trade was closed and a sell trade was open. At this level, we could still be manipulated. As you can see, there is this trend line here. Price could reach this trend line, bounce again. It could suck the buyers in, and it could drop as well, breaking out of that trend line, coming to the downside. So there are so many scenarios that can unfold. The market makers can choose to respect this. Right now, it's not a running flat anymore. It's now an expanded flat formation, right? That's where price makes a high, makes a low, breaks the high, comes back, breaks the low. That's called an expanded flat formation, right? It's basically saying the price is moving sideways, okay? So this price could still bounce from here and go back to the upside. And those who know the flat formation, that's what they're looking for. They're looking for buys. So this entire pattern here is a pattern that induces buying in the market, right? Is the price going to go up? Let's watch. Let's see if it's going to go up. See that? It's still pushing to the downside. But the pattern at some point was a pattern that says go long. So this is one of the main reasons why when you're trading a lot of these strategies that are well known out there, it becomes very, very difficult. Because you can see where the entries were taken for the buyers. Here, it's a running flat formation where this green candle is. Here, it's another running flat formation where this green candle is, right? And here, it's an expanded flat formation from anywhere from this bar once this low is broken. So anywhere after this bar and this one, it's an expanded flat formation for upside. So more buyers are going to be looking to buy again at these levels. As you can see, the buyers are coming in. So what's going to happen? Are they going to succeed in taking this price to the upside? We will see. This is the trend line where there's the break and retest. Another retail trading technique, right? You're taught that if price comes, breaks the trend line, closes below, pulls back, retests the trend line, you look for more sells, right? So at this area, those who are trend line traders are looking to sell this, right? So remember, you have pattern traders here looking to buy this, and now you have trend traders looking to sell this. So now you have an area on the chart where there is a lot of buyers and there is a lot of sellers, because the buyers are coming in here and the sellers are also coming in here, right? So at some point, there's going to be some sort of battle going on at this level, and that is what is referred to as accumulation. So there's going to be some sort of accumulation happening at this area where you're going to maybe see price range for a while. Maybe sometimes it may just do it for 2 minutes, 3 minutes, 4 minutes, 5 minutes, all depends. But at some point, that accumulation will stop and the price will take on a direction. Either it's going to take on the down direction or it's going to take on the up direction. If you're with me, just give me a hello in the chat box. Just let me know who you are and where you're coming from. So right now what we're doing is we're trading a EA. It's an automatic trading software. So basically it takes the trades by itself. It closes the trades by itself. It basically manages the trades on its own as well. Yes, it is possible to get involved manually, but you don't need to get involved manually because this EA is designed to return 100 to 200% within 3 to 4 months. Right? Based on the way how price action really moves. So right now, what it does is it trades around, well, from 8:30 to 9 o'clock. And it trades from 9:30 to 10 o'clock. So that accumulation that I spoke of, you can see it happening right there. That accumulation is happening. And at some point, price is going to either break down or break up. We'll see what it does because we're still in this retail expanding flat formation, and we're still at this level where there's the break of the trend line and retest. So one side is going to be dominant, the buy side or the sell side. Right now it looks like the sell side is going to be dominant. So I guess there's more buyers in the market than sellers. And this is like the psychology of the market. The market makers released information so that traders would psychologically be programmed in a certain way. So if you're psychologically programmed in a certain way, you're looking mainly for just a certain thing in the market, right? So those pattern traders are looking for the buys and those trend traders are looking for the sells. Right? Then you have support and resistance traders as well, looking for, price to, say, for example, here, come back, retest this area, this low here, and then want to go short, right? Then you have support and resistance traders on the long side as well. Let me just try to show you guys this. My VPS is moving very slow today. Let me try that again. Okay, got it now. So you have support and resistance traders like this. This level is a support level, right? So you can see why the price is bouncing at that level. This level here, another support level. See why the price was bouncing at that level? There's another support level, but that support level was broken. And when a support level is broken, what does it become? Resistance. So if you look over here, you can see why the price came and stopped at that level, right? So there is so many different trading techniques, trading methodologies that one needs to understand. And with you understanding all of that information, it still becomes difficult, because which one would you want to apply when? And how would you know which one is going to be in control at that time? So that is why we have a lot of traders who trade one method and they just stick to it. So that's why there is a win rate of basically maybe some 50%, some 60%. That's where the whole win rate thing comes from, right? Because you need to have a certain win rate and a certain risk to reward to be able to be profitable when you're trading strategies like that, right? And it becomes, to some extent, how can I say, I'm looking for the right term to refer to this. I'm just not getting the right term. But basically, you're finding yourself in a situation where, you know, you're trading a strategy that you may believe has a certain win rate, but sometimes you may find yourself in a situation where it just doesn't work out all the time, right? So what better to do than use a system that can follow the price in whatever direction the price wants to go? You know, if the price wants to manipulate and just not go anywhere, stay in that range, okay, in situations like that alone, I will be taking on losses. But in most cases, the price will take on a direction at some point. And when it takes on a direction, that's where you want to make the most profit. And you want to minimize losses when it does not really go anywhere, right? So that's how this EA basically works. It minimizes losses when price doesn't really go anywhere. And when price starts to move in one direction, that's when it really brings in profit. Right now it's moving down, but it's moving down very slow. So you're not going to be able to make a substantial amount of profit because it's moving very slow. There isn't much volatility. But if there is a lot of volatility in the market, the price moves fast. And so it makes a lot of distance, and distance equal profit. So right now we can see for the day we were down 17.21. And right now we're able to make back 8.20. So we can have a slow 8:30 to 9 o'clock session. And then we can have a very fast, very powerful 9:30 to 10 session, which could bring in substantial amounts of profits, right? So we'll watch, we'll see how it plays out today. So, excuse me. So the EA is done for this segment. So this 30-minute, 8:30 to 9 o'clock segment is over. And the EA has closed the trade and it's done, right? So as you can see, for the day, for this section, this segment, we're down $8 approximately, basically $8.01, right? Price continues to move down. However, we're only looking to trade the period of time that we're expecting the price to be most volatile. And that period of time has ended. There wasn't much volatility in that period of time. It looks like volatility now is trying to get into the market at around 9 a.m. Eastern Standard. However, it doesn't matter. Our section of time is over, which is the most volatile period of time. It has passed. It's over, right? Now, consistently, you're going to find that this is one of the most volatile periods of time. So it doesn't matter when they try to show you anything else outside of that. This is one of the most volatile periods of time. And so you want to trade that part of the day. Okay, so I'll see you guys in the next section, which is at 9:30 to 10 o'clock. I'll see you guys at 9:30. Bye-bye for now. I'll see you guys in a bit.